Okay, in previous videos, I talked about our family's goal to build power, and I talked about the components of power as being financial capital, intellectual capital, and social capital. And if you want to build something, then first thing you have to do is take inventory of how much of it you already have. So the previous two videos, I talked about taking inventory of a family's intellectual capital and a family's social capital. On this video, I would talk about taking inventory of the family's financial capital. All right, in order to begin this conversation, I want to give some important information. So one of the things that we want to do is by taking inventory of our financial capital, we're going to create what's referred to as a statement of net worth, a family consolidated statement of net worth, and we will also take a look at the family budget. These are very similar. These documents are very similar to a documents that a business would create in the form of financial statements that are referred to as the balance sheet and the income statement. So I will talk a little bit about these business equivalents of the document that I'm talking about so that we can get an understanding that this exists. Like if we want to create a situation where our family operates like a business, then it is reasonable for us to be adopting some of the ideas that businesses actually use. So the first thing I'm going to talk about is the business balance sheet. And I'm not going to talk long about this. I'm just going to show the similarities between a business's balance sheet and a family statement of net worth. So if I go here to a business balance sheet, you will see right here that there's a section on this document. This document is broken down into sections. The first section is assets, as you see here, assets. The next section is liabilities, and then the final section is equity. So long story short, the assets are what a business owns. So whether you're talking about the cash that we see here, cash, you can see property, etc. Whatever a business owns, those are the business's assets. If we move down to the second category here of liabilities, liabilities are basically things that the business owe, what type of debt that the business has. So the things that the business owe money for is what's referred to as liabilities. And when you net assets and liabilities together, you get the final section, which is equity. So a business's assets, meaning what they own, minus their debts and liabilities, what they owe, will net out to being what that business's equity is. Okay. So that is very closely related. I'll make this a little bit larger. That's very closely related to a family statement of net worth. As you can see here, there's a section entitled assets. There's a section here entitled debts and liabilities. And then down at the bottom, those things net to the net worth, right? So this is a very close parallel to a business balance sheet. A family's statement of net worth is very similar to a business's balance sheet. Okay, so next let's get acclimated to this spreadsheet let's just talk about, I'm gonna make this larger, and we'll just talk about one of these, the categories here, and one of the family members so that we can get used to this. So once I talk about how this pertains to one family member, just know that the same thing applies to all family members. So let's just talk about family member number one. Long story short, let's talk about the assets first. If there's a blank, that means that this family doesn't have anything in this particular category. But here, starting off with the assets, family member number one has about $4,900 in a checking account, right? In a checkings account. They have about $30,000, $29,000 in a savings account. They don't have any money market or CDs or savings bonds, so there's nothing here. So their total cash is $34,000, which is the total of this 49 and this 29. Okay. All right, moving on to taxable investments for the same family member. They have stocks and bonds of a value of $52,000 here. They have investment real estate of $150,000, meaning they own an investment property. Okay, for total taxable investments of $202,000. Moving down to the retirement. Moving down to the retirement section, they don't have anything other than a 401k. So in their retirement savings, their 401k plan, this person has $104,000, which is, we bring this total down to 104 here. That's all they have in retirement investments. If we move down to education investments, maybe this person doesn't have a child. There's no reason to have a 529 plan if you don't have a child. There's no reason to be having, you don't necessarily have to start saving for a child's education before you have a child. So they have no education investments, this particular family member. Moving down to the personal property section. For this same family member, they own a primary residence that costs them $700,000, and they also have a vehicle for a value of about $50,000, for a total personal property of $750,000. truth be told, they probably would have household property. If they own a house, they probably have some household property and other. They could be on this line, but I forgot to put it, and it's really not important for the purposes of what I'm trying to describe in this video. But long story short, once you add up everything that a person owns, that will equal their total assets. So when you talk about their cash, their property, their vehicles, their investments, everything that this person owns totals up to their total asset number. And this family member has $1 million in total assets when you add everything up. All of the family members won't be as well off as this family member, because I have created a wide range of family members so that I can make the example realistic. But family member number one is probably the best well off person in the family. Okay. Yeah. If I move down to debts and liabilities, the first debt that they have, of course, is this primary residence mortgage. If they own a home for $700,000, then it's not unreasonable to think that they may still have a mortgage on this home for about $500,000 in this case. Okay. Education loan, $200,000. Like I said, this is probably the most well-off family member. In order to get well off, they probably have a pretty good job. In order to get that pretty good job, they probably went to school and paid a decent amount of money for an education. So $200,000 in student loans for this person. They have auto loans of about $40,000, no credit cards, or any other debt. So you see they have total debts and liabilities of $730,000. Okay. So everything that they still owe $490 on the home, they owe $200 on their student loans, and they owe $40,000 for a car. Okay, which means they have total debts and liabilities of $730,000. Okay. Now, when you net this person's assets, that you take their total assets minus their total liabilities, then what you get is this net worth number for 360. So if we take this about 1 million minus this approximately 700,000, then you got approximately 300,000, which is 360 here to be exact for this family member. Okay. One other thing that I would say is, since I'm talking about how we take inventory of this, the best way to collect all of this information. So one of the things that we have to do if we're creating a statement of net worth, is something that exists as of a particular date. I'm just using December 31st, 2023 as an example. It could have been June 30th, 2023. It could be any date that the family chooses to do this. They need to choose the same date and collect all of this information from everybody in the family. Okay, so that is very important. I don't want to collect one person's information on December 31st and then collect somebody else's information as of October, as of the end of October. Like, if I'm going to collect this information and consolidate it, it has to be standardized. And the first tactic of standardization is to collect all of this on the same date. So for instance, you would get this person's checking balance as of December 31st by getting their bank statements. So you actually need documents in order to substantiate what's actually in these accounts. You can get bank statements in order to get the cash. You can get these are probably going to be, the investments will probably also be held by a bank or financial institutions, or a financial institution who will also provide statements. So you need to get the statement as of 12/31 for the investments. Things like, let's see, a vehicle or a boat, you'll probably just go to Kelley Blue Book, type in the information for the vehicle. The family member would do that, type in the information for the vehicle, and then get an estimate for the value of their vehicle, right? So, and then you will use that documentation in order to fill in for this particular part. The point is, you have flexibility to decide what the details are, but what some of the details are, but the basic idea is not to pull these numbers just out of the air. You have to go to documents where this information will be held in a reliable form, and depending on which line item you're talking about, that will vary. So the best example of substantiation documentation is like a checking or savings statement that you get from the bank, and you just get that information as of the date that you're talking about, and you do something similar for everything here. Okay, some things will be harder to collect than others, but that's where the family has to be. If the person who's being in charge of this initiative has to be creative in figuring out some of the details. But the bottom line is collect information, make sure you're getting this information from good sources, so on and so forth. Okay, so now that I explained what collecting this information would look like for one person. Oh yeah, and another thing, let me mention one other thing. It is very important, like I said, that this be a standard template. So you need to collect this information from all family members, and it needs to be collected on the same template. You don't want somebody having different line items than somebody else. Like the entire family needs, the person who's in charge of this initiative need to make sure that this is a statement that has the same line items for everybody, so that when it's time to aggregate it, it's going to be much easier to do so. If you need to modify this standard template before you start collecting information from anybody, then that's what you do. Like maybe you need to add a line item here, just insert a row and then add a line item in order to capture all of the information that you want to capture. But the point is, once you have settled on the standard template, then that standard template needs to be used to collect information for every family member. Okay. Now, once you collect information, now that I've explained what it looks like to collect information from one family member, all you have to do is know that every family will be of different size. Some people may have a family of 10 members. Some people may have a family of like 20 members. In this example, I have created a family that has, if I keep scrolling way down, you will see that I've created a family that has 100 family members. So oftentimes when I'm doing my examples, I like that nice round number of 100 family members. This is not really unreasonable. I think most people, if they really, took inventory of their family members, this is not a real unreasonable number. People don't work together, so they don't know that their family may be this big, but many people come from families that have at least 100 people in it for sure. Okay, but long story short, yeah. So since I've already collected that information for one person, just know that this same information has been collected for up to 100 people in this example. Okay, now after collecting this information, the next thing to do is to add it all up together for all family members so that you can see what is this financial position of the family as a whole. So what I'll do here is scroll to the end of this list, get to the end of the list where, as you can see, I have collected this information, like I mentioned, up to 100 family members. The next thing to do is to consolidate this information and add it up across all 100 of those family members. So what we'll see here, I can make this a little bit larger. What we'll see is once you add up all of this information for 100 family members, I've collected all of this information, then we can kind of see what the family's total situation is. Okay, so if we go here, total cash, let's just start in the asset section. If we start with total cash in the checking account, we have $38,000 for the entire family. In savings accounts, we have $284,000 for the family. Long story short, you just add up all of this information for every family member so that you can get the family consolidated total. So I won't go line by line, but I just hit the summary number. So total cash that the family has as a family is $323,000. If you go down to investments, which includes stocks, bonds, some investment real estate, etc., then the family has $1.4 million in taxable investments. If we scroll down for the retirement investments, the family has a total of almost $1 million. This is $900,000 in retirement investments. So 401ks, pensions, etc. When you add all of that up for every family member, there's about $1 million in retirement investments. If we go to education investments, maybe people haven't started investing, especially if you're in the process of getting organized and first taking inventory. You may have a situation where people haven't even been doing some of the things that they should have been doing. So if we add up the family total education investments, there are only $10,000 worth of investments here. Personal property, people have homes. So when you add up the homes of all of these people, then these homes add up to be about 12 million, and the boats add up to be about 1 million. This seems like a large number, but remember, we're talking about 100 people. Between all of those 100 people, then the total amount value of the homes that they own is about 12 million. The total value of the cars and vehicles that they own is about 1 million. And then if I add those numbers up, that's where the 13 million comes from. The 12 and the 1 equals to 13 in total value of all property owned by the family. And then if we add up everything that's owned, whether we're talking about property, education investments, cash, etc., that's where we get this total asset number from. Okay, I knew that was going to jump. Sorry. The total asset number of 16 million. So total assets for the family altogether, when you add up everything that every family member owns, When you put it all together, the family has $16 million in assets. Okay. Now that sounds like a big number, but we got to get to the debt part about it, because you own these assets, but you also owe money on these assets. Okay. So if we scroll down, we see primary residence. The family has mortgages of almost $9,000, $8.6 million. There are student loans of about $1.2 million, auto loans of almost $1 million. This is $800,000 and some change. And then you see credit card balances of $100,000 and some change, for total debt and liabilities of about $10 million. So like I say, these sound like large numbers, but remember, it's 100 people. Now, in order to get the total net worth of the entire family, then you have to take the assets of the family here, which is this 16 million, and subtract the debts and liabilities of the family, which is this 10 million, which brings us down to about 6 million. It's a little 5 million and some change. Okay, so that's basically what the net worth of the family is. Okay, yeah. So the total net worth of the entire combined family is about $5.3 million. Like I said, don't lose sight of the fact that we're talking about 100 family members. This is not a lot of money when you talk about 100 family members. And, just to kind of make sure that I'm not just talking crazy. There are many people in America who have $5 million on their own as an individual. So there's nothing unreasonable about thinking that 100 family members can come together and bring together $5.3 million once they start operating as a unit. Okay, so that's the first thing to notice. Let's see. So yeah, just recapping that. So the main thing that has to happen is, first and foremost, a standard template is created. This template has an asset section. This template has a liability section. And then when you net the assets and the liability, you'll get that net worth. So first thing first, we have to create the template. The template has to be a standard template. And then all of this information has to be collected for all family members. Once all of this information is collected for all family members, we can add it all up and get the total value of everything that the family owns as a consolidated unit, right? And the reason that this is important is because it's one of the things that we do to take inventory of what the family has in a financial capacity. We know everything that we own, we know everything that we owe, and we know everything that we got left over. And this is where we're starting off, 5.3 million as a family to move forward in our financial endeavors. Okay, the next thing we want to talk about is the family consolidated budget, right? So a family consolidated budget is very similar to a business's income statement or statement of income. We know that the company has revenues, which is basically the total money that the company makes. We know that the company has costs associated with those revenues, and then after you subtract the costs from the revenues, you get what's left over, and for a business, that's referred to as net income. Okay, so when we go back to the family equivalent of a income statement, we're just calling it a budget, right? It's a consolidated budget. Make this a little bit larger. As you can see, there will be income items for a family. There's income items for a family, meaning the money that the family members are making and bringing home, and then you have an expense section for the family, meaning the things that we spend money on. And then once we net the things that we spend money on against the money that we make, then of course what we have is what's left over, and what we call it is net investable cash. So your income minus your expenses equals what's left over, and yeah. So that's also important. So this is very, like I say, if we're operating our family like a business, there will be similarities between our family and a business enterprise. So I don't have to talk very long about this particular part, because structurally it's going to work very similar to creating the last statement that I was talking about, the statement of net worth, meaning there needs to be a template created. This template needs to be a standard template, and then all of this information needs to be collected for every family member. Like I said, there may be 10 family members working together. There may be 20 family members working together. In this example, I got 100 family members, but it's the same thing. You just have to go through and collect this information. Yes. So what do we have here? Yeah, so like I say, the template has to be standard. What I mean by that, I kind of already explained it, but as an example on this, sometimes, different people will have already created a budget and they may not have the exact same line items. Sometimes people may, like for instance, we're looking at this line item, utilities. Some people may have broken this out and say they may have created a few lines and said, let me see, matter of fact, if I do here, a row above. They might have broken utilities out into water and sewer, sewer, electric, whatever the case may be. They may have done that, right? So the point is, whatever, that's okay. If whatever you need the template to be, it's okay to modify the template in order to make it and make it include all of the line items that need to be included. But once you have done that, make sure that this information is being collected on a standard template that has all of the same line items for every family member. That will make it a lot easier to combine all of the numbers at the end. Okay. So for this family, when you add up everything that they have coming in, give me 1 second, make this a little bit larger. Okay, when you add up everything that they have coming in and we total it up for the month, right? So take home, so we got gross income for the month of 600,000 here. Then you have all of these deductions, and then what they have take home pay for every month is $485,000. Okay, in this column. So just aggregate all of this information for every family member. Then you can get a monthly total, and then once you have that monthly total, you multiply that by 12 in order to get this yearly total. So if we come here and take a look at this yearly total, if we think about the gross income, all of the money that the family makes as a combined family unit for the year is $7.5 million. If you think about all of the deductions and take away the deductions, then what they have to take home is about $5.8 million. Okay, $5.8 million in take home pay for the combined 100 family members. And then what we have here is all of the expenses. You add up all of the expenses, mortgages, cell phone, groceries, etc. Then they got total expenses of $3.3 million. When you net that together, the 5.8 minus the 3.3 million, then what the family has left over as a family as a whole is this 2.4 million. Okay, so the last thing I'll say about it all is, in order to take financial inventory of of the family situation, two things need to happen. First, we need to take inventory and create a document entitled the Consolidated Statement of Net Worth, where we collect information about the assets, information about the liabilities, and information about the net effect of that situation. So this family, when you do that, you can see where the family starts at 5.3 million. Now the budget is something that happens on a recurring basis, right? So the statement of net worth, let's separate the two and understand the importance of both. Statement of net worth lets us know where we are starting. And then when you go to the budget, so if we're starting off with 5.3 million, we know where we start. We go back to the budget and we see this 2.4 million. This is a recurring number. This is every year the family will make money. Every year the family will spend money. And then once you have what's left over, is this 2.4 million. How you relate these two numbers is 2.4 million, give or take, depending on, various situations, is what we should be adding to the 5.3 every year. At minimum, we ought to be having an additional 2.4 million as a family to add to the family's pot of 5.3 million. So that is the purpose of taking this information. You have to collect this information, take inventory of this information so that you can know where you are, know what your capabilities are, and therefore you can start planning and strategizing as a family as to what the next moves will be.